Welcome back to Squawk Box. Rick Santelli here, live at CME HQ with breaking news. Our June read on housing starts and permits. On the start side, 1,559,000 seasonally adjusted annualized units. That's a bit light. We're expecting a number closer to 1.580, so 1,580,000. That actually is the lightest just since last month when we were 1,549,000 before that gets revised, and that was the weakest since February of last year. And if we look at what's going on with permits, 1,685,000 seasonally adjusted annualized units. That's a bit better than expected. However, even though it's better than expected, it is still the lightest read since September of last year. We are starting to see some revisions last month, getting upgraded a bit from 1,549,000 to 1,591,000, which makes this month's read the lightest read since February of last year. Now, there's a variety of issues going on with housing. There's a whole segment that does cash deals, that's looking at the price potentially coming down as a positive because they want to get deals done. There's a lot of people that are dropping out of deals and contracts that were pretty much already completed. And we know that, of course, interest rates, supply issues are all playing havoc with what's going on with regard to housing. But maybe the one bright spot, if you wanted to call it a bright spot, slowing housing might help the Fed accomplish its mission, because it looks like it's going to have to strangle the economy a bit to get inflation where it sees or deems it to be versus where it's ultimately ended up due to a variety of policy issues. Joe, back to you.
Rick, do you think the number is 9? When we saw, who was it that raised them by 12? Pepsi. Pepsi went up 12 just on prices. So is it really just 9 all in, do you think? Or are we underestimating? Is it double digit already?
You know, I think that we are close, but I think we could still see a few months where we pop into double digits. I still, once again, think that the real issue is there's going to be reversals here. The issue is how far they move back down and how far based on history. In other words, are they going to go back down to where they were in 2018, 2019, or are they going to stay at elevated levels but not at the highest elevated levels? And that would be my choice. Yeah, I think we're going to see certain aspects of the economy without a doubt get into double digits, Joe.
I wonder if the labor force is like any other commodity, Rick. And that when, if compensation goes up, do they come out of does the participation rate rise? Does the higher prices?
Well, it's a complicated issue.
Higher wages
cause
an easing of a shortage?
Higher wages. But what are we competing against? You know, what is the actual defining number to get someone who is able to work, who chooses not to work? What is that number? What benefits is he looking at? Maybe that the government's giving them, or what does he want to do versus working? It's gotten a lot more complicated post-COVID. I don't know that I can answer that question, but one thing I can answer is that we've had a really good run on jobs, which makes sense. You know, we all forget we shut down the economy, you reopen it, things are going to happen automatically, if nothing else. But those jobs that we've been creating are going to run into a brick wall here soon because demand is really starting to slack off, and that's going to make an ultimate difference. And I still say it's all about jobs, jobs, jobs. Once that turns, everything's going to turn fast.
Okay, Rick, thanks. Let's get to Diana Olick now with some instant reaction. What are these? Are these cracks we're seeing, Diana? Are we in a full-fledged retrenchment of that great story about housing prices?
I think we're moving towards that retrenchment. I mean, look at these numbers. They were a little bit weaker than expected overall, but when you break out single family, which is what we're really watching here, you're seeing big drops. 8% in the permits month to month, down 11% year over year. Also in the starts for single family, down 8% and down significantly year over year. And this is when we talk about the big builders, D.R. Horton, Lennar, Pulte, Toll Brothers. They are all warning that things are really slowing down. And you saw it in the builder sentiment numbers yesterday, an epic drop of 12 points. That was the largest really in the history of that survey on builder sentiment. Builders did note in that survey that they are seeing price cuts. They are seeing more and more builders drop prices. We had Ivy Zellman on CNBC yesterday. She was saying that we are just in the first innings of what you called that retrenchment. But I would also note The big gains that we're seeing are in multifamily, and that's a good sign because we do need more multifamily rental housing. Now, granted, it takes a lot longer to prepare, to plan for this, and so it's not reacting to the markets the way single family is. Single family is reacting. Remember, these numbers are for June. June is when we saw the average on the 30-year fix start the month at 5.3% and then jump over 6% right smack in the middle of the month. It then came back a little bit by the end of the month. Builders saw that, though, and obviously you're seeing that in the single-family numbers. It made them nervous. They started to see buyers pull back. We saw that in earnings report, that buyer traffic was coming down. So again, I think, going forward, we're about to get some big builder earnings soon. We'll see what they're seeing in July and their latest read on it. But we are going to see a significant pullback in housing going forward, and that could mean lower prices. But again, prices are so high right now, up 20% year over year, that even if prices are pulling back, perhaps even to 4% gains, 2% gains year over year, that's still a more historic level. I think people have gotten used to this crazy home price appreciation, and they don't remember what normal is. Will we see prices really lower year over year in some spots? Perhaps in some of those hottest pandemic markets. But I don't think you're going to see a national home price decline anytime soon, just a major slowdown. The only problem with this is we do need more supply, and we're certainly not going to get it this summer. Guys, back to you.